Yes. Hello, welcome to another episode of Daily Market Mastery with me, popular investor Christian Rauchenwald. Unfortunately, we didn't have an episode yesterday because our internet provider was having issues, which means we didn't have proper internet. Like now everything is working again, and therefore here we are with episode, which episode number do we actually have? Let's check real quick. Episode number 42 of Daily Market Mastery. Like a live stream series that gives you an insight into how I manage my portfolio or our portfolio as a popular investor on eToro. You can check out my portfolio, what I'm currently holding, what I'm invested in, what I'm shorting, and my track record by following the link that you can see on the screen or in the description down below. That said, long story short, I'm using Elliott Wave Theory or the Elliott Wave principle to predict market movements or try to predict market movements in stocks, indices, and pretty much every other asset. You can find everything I'm using, including a link to read the book online for free and our one-page cheat sheet for Elliott Wave Theory linked down in the description below. And if you're new to Elliott Wave Theory, but you don't want to jump directly into reading the book, which again, you can read online for free, you can check out episode number 1 of Daily Market Mastery on this channel because it covers the basics. It's a little longer with 1 hour, but it covers the basics of Elliott Wave Theory and gives you an idea of how it works. Now, that said, where do we even start? I'm gonna open up, that said, before we actually even start, we still need to get the legal disclaimer out of the way. As usual, everything that I share in this live stream / video, depending if you're watching it live right now or as a recording later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And with that, how do I get that gone? Yeah, with that, we can jump into, in this case, eToro to take a look at the portfolio. Just going to push the magic button here, and here we are. Now, as you can see, 1 second, just need to update my timer. So, live stream, there we go. So as we can see, the past 7 months have been a torture for the portfolio, and we reached probably it on first glance looks like a historical high drawdown of 30%, but actually we also had a higher drawdown already in 2021 where we suffered pretty much a 50% drawdown after January. Although during that time, I shared it earlier, I didn't actively manage the portfolio, but actually was just holding certain positions to see if they can gain more tractions or not, which they didn't. Still ended the year quite well, but for everyone that joined in February or later, obviously it was a disastrous year to begin with. Overall, the turnaround that we have been expecting, or I have been expecting, I had to scroll a little so you see it better. So we see in 2021, we had the drawdown. And so the turnaround that we have been expecting in the NDX and SPX and so on has been a little bit longer in the waiting. I actually expected that July would already be a profitable month for us, but it turned out to be the fourth worst months of the year. So we actually had worse months, sadly. But August is starting off well. And if we take a look at now we're using TradingView, which is also linked in the description down below, at the SPX, we can see a more or less clear 1-2 pattern here, which means we would now be in wave 3 downwards. If we look at the NDX, where do I have you? Or let's start with the Russell since it's already here. We have a similar 1-2 pattern. We're now on the way downwards. If we then find the NDX somewhere, let's sort by alphabet, N, NASDAQ. Now, where are you hiding? There, NDX. We can see a similar one, although the recovery here has been much bigger, mostly driven by a few companies that had incredible results. And then the last one would be the DGI, where we have a similar pattern 1-2, although here it's even clearer pronounced with an A, B, C visibly here on the monthly chart as well. Whereas if we again circle back to the, now where is it hiding, NDX, the ABC is not as clear-cut visible. However, in all of them, we're actually expecting to now see the downwards turn. Now, I'm so convinced of that actually just recently I opened a new position shorting the NASDAQ, and you don't see it in my main portfolio because I'm not doing it in the main portfolio, but in my secondary account. Why am I doing it in my secondary account? Because as a popular investor, I have limitations as to how much or what percentage of assets I can invest or hold, or what percentage I can invest or hold in a single asset. And if I were to hold that position in the popular investor account, it would violate that limitation. But in my secondary account, I actually hold another, like 14,000 euro short, $14,000 short on the NASDAQ. And I took a closer look at the NASDAQ. Now, usually we look at things on a roughly 2-day chart. So we have a lot of long-term investments where things look like this. So we expect to have wave 1, wave 2. Wave 2 took longer than expected. And part of that is completely on me. Another part is on just how Elliott Wave Theory works, that at any given moment there might be multiple variations that are valid. And then only with future candles we actually see which one is true. And in this case, wave 2 dragged out very long, which again is because of a couple of stocks that actually performed way better than expected. I would call it the AI bubble because it's purely driven based on AI. And we'll see when that bubble bursts, although we are now in the everything bubble anyway. So where we go now. However, if we zoom in from here, so assuming that this is our wave 2, and jump here to, where do we go? Let's go to an hourly chart. Actually, let's jump, let's start here and zoom in, or again, wrong direction. So if we zoom in further and we're still on the hourly chart, and that's our wave point 2, then we saw that the NASDAQ had the worst week it had since March last week. And then surprisingly, we saw that Amazon and others actually reported good earning results, but the market did not really rise further, which means those good earnings were already priced in the top that we saw here. And despite those good earnings for a few companies, there are a lot more companies that actually aren't performing that well in comparison. And now that doesn't mean that they're losing money. That doesn't mean that their stock didn't gain anything this year. It just means that on average, the Standard & Poor's 500 and the NASDAQ both are up because of a handful of stocks out of the entire selection. And in my opinion, if we look closer, so I think I did that on a 15-minute chart. So if we look closer, it right now looks like this. So again, back here, now it's going to jump to 30 minutes, maybe no. Back here we have the high, the recent one, and that, as you can see, it's from July. And then we had the first drop here, which completes or plays out a nice 1, 2, 3, 4, 5 impulse wave pattern. Then we had our corrective wave 2 that if we add a Fibonacci retracement here, that's 0.5, we traced almost 78.6. Now we know very often waves or wave 2 retraces 38.2 to 61.8, very often, not always, sometimes more. And then we here have the beginning, or so that's wave 1, 2, and now we have here the beginning or the progress of wave 3 downwards. And in that wave 3, although not as clearly cut for many, probably we already have wave 1 played out. So if we look here, we can see that this here is a wave 1, 2, and then wave 3 is usually the strongest movement, and in this case that's a gap down. Wave 3, wave 4, wave 5, and with wave 5 complete here, let's check real quick. Low 15,270.72, 15,000. Okay, that's higher, so that's here our point 3. So of this pattern here, or not point 3, sorry, that's our wave 1 here of the wave that makes up wave 3. Because obviously wave 3 has to get lower. And then we have another retracement here. Now I removed the Fibonacci retracement, yes, so we're gonna drag a new one here, which is gonna help us, need to zoom or scroll a little, zoom out a little bit. So if we then look here on this lower degree wave, we can see that our second wave here retraces 50%, which is also okay. And it's not a clear-cut ABC corrective pattern, but it's clear enough. The lower the time frames get, the harder it will be to identify patterns, which would indicate that this here is wave 2 finished, which means we are now in this third wave where now we had a drop and then yesterday a recovery, and then recovery, and again we get a retracement here to check for this first wave. And that recovery retraced 61.8%, which again is a very common area of turnaround, so 38.2 to 61.8. And right now, at least according to eToro, whatever the market made, so right now market closed at 15,410.85, and according to eToro's in quotes pre-market price, we are now at 15,339, which is around below that yellow line. So we basically, the gains that happened yesterday, I mean, it gapped up yesterday, then it moved down and closed the gap. I think it closed the gap, missed trade opportunity here, 15,280, and that low here is at 15,260. So it closed the gap and then it recovered, went sideways, and then in the power hour, the last hour of trading, it actually went up further. Now, let's check real quick here. Chart settings. Do we have extended data available? Now, where was that? Not chart settings then, but edit instrument. No, there we have historical, intraday, advanced, show extended data, show extended data. Okay, so now, but I would have to clear the local data probably. Nope, doesn't change anything. We don't get the extended data here, so I'm just gonna undo that change. So just to make sure we're on the same page. Anyway, so assuming this is correct, then we would be right now in a third wave of a third wave. So that's this one here, of a third wave of a third wave, which means, so third wave. So in like 3 different third waves. Third waves are usually the strongest movements, which means assuming that this is correct, the NASDAQ should actually today have, like, I mean, it's not going to drop thousands of points, but it should today have a negative day and rally downwards. Now, there is the chance that this here is not finished yet, and therefore that this here is not some kind of like ABC that plays out like this, but that this actually still is in progress. But considering the Fibonacci retracement, it actually seems very reasonable. Yeah, now in case you're wondering, or in case you're not aware, we're also using, parallel to that, Kennedy channeling technique. That's why you see all those trend channels, where we can draw our so-called base channel by connecting our point 1 or 0 with point 2 and a parallel through point 1. Now that's here on the lowest degree, although that point is a little bit off. What's the low here? That low here is 15,258 something, and that low here is 263, and that low here 258.92, 258.69. So that here actually belongs here, which makes this here a clearer corrective pattern. And then that parallel actually goes here. Now, with the base channel, again, that base channel here could still change if this moves here further. If it moves higher than what we had here, then it would invalidate this wave 2 and so on, yeah. But with the base channel, we usually would see wave 3 confirmed once we have a breakout to the top, in this case to the bottom, since our wave 3 goes downwards. And therefore chances are, again, I might be wrong, I'm not always right, nobody's always right, but chances are that we actually will see the NASDAQ go down here, breakout from here. Eventually, yeah, like using a Fibonacci extension, we get potential price targets here for that short position of 15,158, 15,000, or 14,840. Again, that will not happen in a day. That's not in one candle or so. But that's where we would aim for short term for this third wave. So it would break out from here, go a little further, maybe go as far as here, and then it would turn around and very often, but not always, touch the top, or in this case bottom, since we're again looking in a bearish scenario of that base channel, or the median. The median right now is not visible, but the median would be here. And then we would have a fifth wave that again recovers at least 70% that it lost here, or most likely builds a new low, or yeah, like a new high, but in this case new low. And then the same, so we're waiting for a breakout from this channel, while at the same time, if we look, we even missed one base channel here, yeah. So because this one here is of a bigger degree, let's get rid of this one real quick for a second. So, and at the same time, we have another base channel of the wave pattern of a bigger degree, so which would be that 0, 2 with a parallel through this wave 1 here, where again on the bigger degree we expect that we break out from this channel here, and then if we go even further, we have the pattern here, which is Here we have our point 0, here we have what we assume to be our point 2, and here we have our point 1, where we expect the breakout from this channel to confirm our third wave here. Now we see that we almost already had that breakout, so we got close here with this wave 1. Now we're with wave 2, and again now a third wave that should take us basically out of all those channels. Then we have a retracement. Then depending on the degree, so we might retrace first here. So yeah, anyway, it doesn't matter. So we have a retracement and then we go down further. That's for the NDX, and I've wasted a lot of time now in this stream to cover that because I said I just entered a new short position there in my secondary portfolio. Yeah, we'll see how it goes. Like again, yesterday that position lost money because of course yesterday we saw the gap up and then that up here. Today so far it's like plus minus 0, was a little bit in plus. Now we're moving towards the plus minus 0 point, and we'll see how the day goes. Now if it goes up further, obviously that's gonna be meh for me, but yeah, we'll see how it goes. Overall, if we switch back to our usual 2-day chart, where things might look a little bit chaotic depending on what motive wave shows and hides. Yeah, so the channels are still there. Yeah, so if we're looking at our 2-day chart, we are pretty much like, yeah, like fine in quotes. Yeah. What's very important here, it's very interesting, even if you don't believe very much in Elliott Wave Theory, right now is a situation where the risk reward ratio is great, because like right now, if we look on the pattern on the bigger degree here, we cannot go above 16,764 because that would invalidate the entire pattern and would really make me baffled. If we were to go there, then again, everything would be invalid. So if we right now were to short the market, you can set your stop loss at 16,764.86. Whereas if this pattern is right, the profit target has to be below the 10,440 mark for the third wave. It has to break out of this bigger base channel that we don't see right now and build a new low here, then retrace and then build a fifth wave and go down further. And I'm not saying that we go down to 6,000 here. That free is a little bit random. But we can also throw a Fibonacci extension here, and 0, 1, and then and then we can see that actually 7,791, 8,712, those would be long-term profit targets. So 8,712 roughly, for example, would be an acceptable target. Or 7,700, that's what we said here, 7,700 roughly here, yeah. So that would be a acceptable target for 1, 2, and then the breakout wave 3, and then we have a small retracement, maybe to the median up, and then we go down further. And yeah, so that's about the NDX. Now in the SPX, and in case you're wondering why I decided to make a specific short position for the NASDAQ alone, it's because that one has the biggest movement, so it also has the biggest drop potential, which means the short position has the biggest potential to return a bigger profit. Now, overall, I'm still as bearish in all the other indices, so we'll obviously have to wait and see. We already had a downturn here that then eventually turned around and fooled us. We had the same thing happening here, so we thought we're in wave 2, wave 3 downwards, but then it turned around and actually turned into a bigger corrective pattern. And we thought again, now we're in wave 3 downwards, and then it turned out to be a combinative corrective pattern, and now we're again in the downward spiral or in the downwards movement. But again, we're in the same situation that if we were to reach 4,818.62, then the entire labeling would become invalid, and which means then it would go back to the drawing board. My entire bearish scenario would turn invalid, and we would have actually probably eaten up all the profits that we made on the way down here, on the way up here again. And so, yeah, so it's very unlikely, because Elliott Wave Theory for me personally has proved very reliable. If you don't believe me, then you can also check out, wrong browser. If you take a look at my portfolio and there go into the history, you will see that this year I started to pick individual stocks and analyze them based on Elliott Wave Theory, and the result looks like this. Now you see that there are SRTI, SDAO, and SRTI positions. Those are bets against the index where I entered the wrong stop loss, human error. Otherwise, those would still be open. But overall, if we look at the last 6 months, since we already have that stream going longer, using Elliott Wave Theory for individual positions. I got it wrong in Alibaba, I got it wrong in Peloton, I got it right in Domo, I got it right in Shopify, I got it right in Ford, I got it right in NEO, I got it right in Icon Enterprises, Goldman Sachs, Black Knight Inc., Domo again. And yeah, that's so far. And right now we still hold positions in Disney and again in Icon Enterprises. In Icon Enterprises, we can look at that real quick. The prediction was actually why we closed. So if we zoom out a little bit here, probably 1 day chart is enough. The idea was that this is 1, 2, 3, 4, potentially 5, and we will see an ABC. I honestly expected the drop to go in the area of what we have here, in the area of 26. We actually gapped down because of bad earnings results to even 20. Should have set the pending order, but yeah, I had an alert. That alert triggered, although that was on a day where I unfortunately had no chance to get to my computer, so I only entered that position slightly later. But yeah, here now our stop loss is very interesting because since we already went so far beyond, if we looked at the retracement, so far beyond what we would have expected, and we actually retraced 78.6%. If it were to go below the low that we have here of 20.54, then our labeling here becomes invalid. And if that's the case, then then basically we can close the position, which means we have 11.41% risk on that position, whereas our take profit long-term would be a new all-time high. Short-term, again, this would then turn into a 1-2, which means we would have an extension here. So our short-term profit target, which I can also update real quick, would be 46.88 or 55.19. So we can set an alert at 45, I would say. So set price alert at 45, at which we would consider taking a profit. And at 45, so just to run the numbers, at 45, so we have like an 11.41% risk here and a 94.09% reward if our profit target is correct. And looking on a smaller degree, so you can already see that we also have a Fibonacci retracement here. If we go back to, what did we have, 15 minutes, then you can see that here we also retrace almost 61.8%. It's 1, 2, or there's probably the 1 is hidden in here, and that's then wave 3, 4, 5, or 1, 2, 3, 4, 5. Either way, it should check out. So let's see if auto labeling gets it done. Okay, so we would have to move in closer, and which means this would here be our A, B, C, and then here would we have another 1 in development with potentially wave 2 now happening. Again, which also means that theoretically we could set our stop loss even closer at 22.60, but that's cutting it really close. That would then reduce our risk to 2.5%. But it's possible that this is not the ABC yet. What's definite is that if we go below this low here of 2054, then we definitely have our pattern wrong. If we were to go a little lower than this, then it might just turn out that this corrective pattern hasn't finished yet. So that's something we would wait out. Now, on the other hand, we still have a position in, again, wrong browser, in Disney, which is currently at a loss, and which is interesting because Disney is going to economic calendar tomorrow, release their earnings. Now, there are two things that can happen. Either we got it right, and again, Disney is one of the cases where I'm not so sure about. We basically have our, we assumed that this is wave 4 and started our position for 2 reasons. First, we already have the 38.2 retracement, which again, often, not always, is the area of turnaround, but it could also be anywhere here or even further, yeah, but often, not always. And additionally, wave 2, or in this case wave 4, often retrace into the area of wave 4 of the previous impulse wave of a lower degree. Now, the previous impulse wave would be this wave 3, and of a lower degree would be if we subdivide this, where this would be basically 3, 4, 5. So that area here, and we are in that area, so it fits a few different guidelines, in quotes, to tell us, okay, this is our turnaround point. Although one can also argue that this here is 1, 2, 3, 4, 5, and therefore then that will be A, B, C, and then we will have a wave C down, so that this will be wave A, B, C, and then we might actually go to 42 as a turnaround point, or in that area. That's why our stop loss now is at 84.07, so our risk here is limited to 13.54%. while our take profit actually means that we go above 200 in the next couple of years or months, or more likely years. Yeah. Today's earnings will probably make the difference because Disney is at 86.83. So if the earnings are good, we turn around and our pattern here might check out as correct, and this might be the first 1, 2, and then 3 in development. Or if earnings are not so good, which is also a possibility, then we might have a gap to the bottom. I assume they released the earnings after market close today, so we might have a gap to the bottom tomorrow. Our stop loss triggers, and with that we are out of Disney until we then would set an alert, probably in the 45 range or 60 range, to watch it go down and then re-enter later. Now, last position that we still have open. No, we don't. Do we have it open again? Let's check. Alibaba. Alibaba is the next position that we have open. And if we look at the economic calendar, do we have Baba listed there? Yep, they released their earnings in 2 days on Thursday. And in Alibaba, not much changed, I guess. So we're assuming that it looks like this, so that we also are in a third wave of a third wave of a third wave, so 3 third waves, which means we would have this trend channel to break out to confirm this third wave, and then we would have a bigger channel here to break out to confirm that third wave, so where we first have to finish this here, and then that will be wave 1, 2, 3, 4, 5, which breaks out here, and then that whole 1, 2, 3, 4, 5 will then basically break out on the biggest degree, if we are right. If we are wrong, we will go lower, and actually in Alibaba, so in Alibaba, our stop loss for that reason is right now at 82.64. It's actually set based on this wave too. So we're really cutting our risk here close, with our risk being 15%. So I mean, it's still a little bit risk, but our take profit would obviously be much higher. The first profit target, if we again throw an extension here, would be the 132, so 101 to 106, and that would be, if I check it real quick, okay, so our risk reward ratio here in Alibaba is not as great, to be honest. So if we go to the 101 line, honestly, we probably, when I created the position, we first had the stop loss at 77.77, if I recall it correctly, and therefore we considered, okay, our risk reward different, because we considered, okay, we actually are supposed to, didn't want to extend that, go back, okay, don't go back. We actually are supposed, or did calculate it like this and say, okay, our profit target would be the 160.78, 160, and our stop loss would in that case be then at 51, in which case we had 40% risk and 60% reward. So not as good as our usual trades if we do it like this. But on the other hand, like, we now limited the risk by saying, okay, we focus on the smaller pattern here, and our stop loss is at 82.64, and our take profit will probably be then in the 120 range if we close the position, or we can leave it open, because that would mean if it crosses that line, we're in profit, and we would likely then retrace back to the channel, still in profit, or to the median, and then move up further. Again, probably in 2 days we will see some movement, although obviously expectations are already priced in, so only if the earnings miss or exceed the expectations by a decent margin will we see some bigger movement here. But that's what we are looking at right now. And other than that, we're still looking for new opportunities to invest. What's up next in terms of earnings? NEO, and then there's dividend date for Icon Enterprises. Not sure if we bought again in time to get the dividend. Doesn't really matter much, to be honest. We focus on the performance. Then NVIDIA is upcoming. NVIDIA would be interesting to see, because obviously that's one of the stocks that look it up again, sorry. NVDA, so it's one of the stocks that has been driving this rally so far. So if we look at NVIDIA, and we haven't so far, and we start with a monthly chart, 1 month, and inherit settings, and then we first, as always, go to trading view, and there look on the monthly chart, zoom out to see the history we have. So here we have history since 1999, and in Motive Wave we have history, get rid of the volume, we have history since 1999. However, we don't have a split. So there's a split that's not adjusted, because clearly if we look here, we can see that this here is low, and we can also clearly see 1, 2, 3, 4, 5, with a potentially extended fifth wave, and then we have a corrective pattern that's probably a combination. Either it's a corrective pattern that just is like this, wave 2, and if we look closer, we see how it subdivides, or it's a corrective pattern that is a combination that goes till here. Either way, we would then have, so that would be wave 1, 2, and then here we would either have 1, 2, 3, 4, with the fifth wave still being in progress, which is insane, yeah. Or this here is somehow, no, it has to be with this low, it has to be 1, 2. Or if this is the, so like, let's draw it real quick. So if this here is 1, 2 till here, then that would be 1, 2, 3, 4, but it needs that's not possible because we entered the price territory of wave 1. So this would have to be wave 1, 2, and then wave 3 would still be in progress, and 4 and 5 we don't know yet. And then in here, this here would be wave 1, 2 again, so on a lower degree. 1, 2, and then wave 3 could be this, but also could be this. It's a little hard, but if this is 3 and that is then 4, obviously it's a relatively short wave 4, then this here could potentially mean that we are at the end of wave 5, which would then mean that actually wave 3 ends right now. So after the insane rally NVIDIA had. Now for that, we can obviously also use Kennedy channeling technique. So if we take, first of all, on the biggest degree, our wave 1 and 2 with a parallel through 1, then we have a breakout here. Now quickly switch from logarithmic. Yep, that makes it easier to see. Yeah, I think NVIDIA is going to come crashing down. Like if we look at this, so if we get rid of all the stuff that we have on the chart, we can see a clear 1, 2, 3, 4, 5 pattern. Our beginning data in motive wave is unfortunately wrong, but if we now, where was the switch here? If we switch this here, we can also see it here. And if we now just from a random low point here draw this, okay, it says 1, 2, it doesn't get that like this. But if we put a retracement, or yeah, not if we put a retracement here, but even without that, so if we use the same rule that very often, so this whole thing will turn into wave 1 of a bigger degree, and then we would have wave 2 coming here, and very often we would retrace into the area of wave 4 of the previous impulse wave of a lower degree, which would wipe out 75% of NVIDIA's value. And if we, I don't know, the low point would actually be somewhere here. Yeah, so I'm gonna pick anything here. And then, yeah, like a 61.8 retracement would already get us into 100. Yeah, so like we can see that even if we go based on the common but not guaranteed retracement areas, we would expect to go to 300 to 180 in that area somewhere, but even the $100 mark per share would not be out of the question. And looking at this pattern here, I don't know, like I can see a clear 1, 2, 3, 4, 5. Although wave 3 here is not the strongest, because obviously the rally we've seen here is much stronger. It just doesn't divide any other way here. I don't see it like this is wave 1, 2, and then this is wave 3, because if this were wave 1, we would need to see a wave 1, 2, 3, 4, 5, and then wave 3 here. If that were wave 3, it just doesn't divide that nicely. Obviously here with our original data source being wrong because it doesn't account for the split, it makes it harder to label. But even if we go back to trading view, then we would also, or we can also see, yeah, it just still looks like 1, 2, 3, 4, 5, and even here 1, 2, or 1, 2, 3, 4, 5, or extended third wave 4, 5. A, B, C downwards, and now here 1, 2, 3. I mean, there we probably might see more on the weekly chart. Yeah. So if we look on the weekly chart, we can also see a 1, 2, potentially 3, 4, 5 here. So to indicate that that fifth wave has finished as well. And yeah, and the other way around, actually, if we take that real quick, and if we do it the other way and throw an extension here from somewhere, it's hard to pick the right low point because again the split adjustment hasn't been done properly. So let's pick somewhere here. So again, this is now not super accurate because we don't have the correct historical data, but we can see that we reached the 138.2 extension and from there turn around, and it's an additional sign. Now, if I change that a little bit, we can see that it doesn't move very much. So even if we have a lower low, so yeah, if we look at this logarithmic and we actually say we started from here, then everything changes. Never mind, ignore that. Yeah, like sometimes I'm also not making sense. Yeah, but so basically looks like Nvidia is going to go on a downturn. Let's see what their earnings say. But even if they have good earnings, it's still possible that people just want to take their profits out of the rally that Nvidia has seen. And with that, we would see a downturn here. And again, not overnight, just like it took from whatever we have here, 21 to 22, an entire year to make that gap. We would obviously then talk about a year or two to make that gap here. Now, yeah, I guess that's it for today, to be honest. Yeah, so with that, we actually covered my new NASDAQ position. We covered how we are looking in the indexes. It's going to be interesting to see. There might be a couple of positive days in between, of course, and so on, but we have some clear points that we shouldn't violate. I'm obviously going to keep an eye on it. And yeah, if there's a need for make adjustments, but I don't think adjustments are necessary right now. We'll see how our positions in individual stocks play out, and we'll therefore then see how things go further. It's going to be interesting to see the earnings of, obviously, of Nvidia and of now what did we look at? Disney. So to see if our Disney position actually goes in the direction that we think it should, or if it busts. And the same with Alibaba, if we move there in the right direction, and again, I'm proven right, or if it's one of those cases where I'm simply wrong. And again, then last but not least, on the 23rd, we're going to see how Nvidia does. They might, of course, still go up in the meantime, so there might still be upwards candle, but I think like the top is in Nvidia, which probably, if we look at Amazon, probably will get us a similar result or not. Like if we look at Amazon, there it's not so clear cut. So because we have this theoretically 1, 2, 3, 4, 5, and then the corrective pattern here might have already finished. 3, 4, we retrace into the area of wave 4, which means it could also be if that's 1, 2, 3, 4, 5, or if that is 1, 2, 3, 4. That's not possible because then it would have to be a leading diagonal since we are entering the area of wave 1. So it actually could be that Amazon will go up further. So from the looks of this here, and if we adjust it logarithmic, then it's harder to spot. Yeah, logarithmic, it's harder to analyze here because we would look at a 1, 2, and then basically still be in the same channel upwards with wave 3, not even, or no sign that we are technically in wave 3 since we don't have a breakout from it. So here, logarithmic scale doesn't get us anywhere. So yeah, like, so Amazon not so clear cut because there's also the possibility, however, that the whole thing downwards here is a 1, 2, 3, 4, 5, which makes this wave A of a corrective wave. Now we have a A, B, C, wave B, and now we would have a 1, 2, 3, 4, 5 downwards, which would get us to a lower low, or should at least get us to the same low. But while in Nvidia we have a couple of signs that point towards the all-time highs in, things will turn around because people start taking profits, other people start panicking, and there we go. And in Amazon it's not that clear cut, but there's also the possibility. And if those two stocks have their turnaround moment, then obviously the indexes are quite screwed because those two stocks are among those that drive the markets up. And if we take a look at, oh, here I've been wrong. We see that here for Apple, I expected, or I said, okay, maybe this is the case that we correct further. It clearly was not. We went higher here. If we here, okay, logarithmic in Apple also doesn't get us that far because we have too much history. Although there, on first glance, it would look like a 1, 2. That would need to be a leading diagonal, 1, 2, 3, 4, 5. So 1, 2, and then we would be in wave 3 upwards, and wave 3 might have finished. But if we look on arithmetic chart, then, and we'll have to clear all the garbage that's on the chart, then yeah, it's similar that we might have a 1, 2, 3, 4, and 5 finished, and will now be on our way down. Although, again, that's just a quick overview analysis without verifying anything and so on. So for NVIDIA, for Amazon, for Apple, it looks on first glance like this, like in all those stocks, the top is in. And we are actually now on the way down. Apple obviously didn't have great earnings, but they still were profitable. And with Apple, probably we see that we now are gapping a little lower. We have like support and resistance levels here. So zooming out, yeah. So breaking those, so around the 180 mark, 170, 180 mark. So breaking those, especially if we go to 170 or below 170, we probably are on the way down more likely. As far as how far Apple could go, if we look at this, we would expect it to correct towards 126 in that area roughly on first glance, which again would be a significant drop. And if those three behemoths of stocks that are driving the indices or some indices right now are going to go down, then well, then our bets are going to pay off nicely. We obviously have to wait and see, but that's what I currently expect. Now I'll keep you posted. Yeah, and if you have any questions, as always, you can share them in the chat or as comments on each video or on any of my posts on my eToro Popular Investor profile. I hope you were able to take something away from this. And with that, thanks for tuning in. See you all then probably next week, unless there's not much development, then we'll move the stream for another week and switch to bi-weekly. I'll keep you posted on my eToro feed about that. And yeah, till then, bye-bye, guys.